Good afternoon, everyone. Thanks for joining us here today. We're going to try to keep this interactive and save some time for Q&A at the end. So we hope that there'll be some questions. But to start off, I just wanted to say how honored Eduardo and I are to be here at the MAS FinTech Festival. It's been a wonderful few days here, and we're really excited to spend the next 25 to 30 minutes chatting a little bit about our views on FinTech and hopefully getting some questions from everyone here. Just as way of introduction, I wanted to introduce my co-founder first. Eduardo is originally from Brazil. He's born and raised in Sao Paulo. He then went to the US for high school. Later attended Harvard, where he was involved in a number of entrepreneurial activities, eventually resulting in co-founding Facebook. Since that time, he has been investing and backing lots of great entrepreneurs, and has now been here in Singapore. So he's a local for nearly a decade now.
Yeah, since 2009. Time flies. And Raj, let me introduce you briefly, my co-founder, Raj. He's a fast learner. When he was 12, he was programming. And I think he always wanted to be a less social person, someone that would be termed as a geek. So he started, was born in India, moved to the US, ended up being part of a financial services startup that survived miraculously the dot-com bubble. He eventually moved into the corporate world by working through consulting and eventually on the investment side through Bain Capital, both on the US side, and he helped be part of the founding team of the Bain Capital Asia group. And Raj and I have had the pleasure of working together for many years now, starting to invest into technology companies, while he's also been concurrently serving as an advisor to the Boston Consulting Group.
Great. So thanks for that. Thanks for calling me a geek in front of a small crowd.
It is my pleasure.
Yeah, I appreciate that. Let me start by asking, what are you doing here at the MAS FinTech Festival? You co-founded a social media company, Facebook. What excites you about FinTech, and why are you interested in FinTech at all?
So it's funny, meaning the Facebook experience is incredibly humbling. To be frank, at day one, we couldn't have in our wildest dreams imagined the size and scope of the company that it is today. But one thing that you yourself remind me all the time, it's how unambitious we were from the perspective of the market that we were targeting. Today, it's primarily an advertising-based business model, and advertising is close to 1% of the world's GDP. And technology innovation is going to touch really large industries that are much, much bigger than the opportunity Facebook initially tackled. Meaning if you think about financial services, you're talking about something significantly above and nearing 20% of the world's GDP. And it's a really exciting place to be at. And I think it's the next big thing, this idea of moving past industries that are evolving from a technology perspective through disruption into ones that are evolving through transformation, which is young startups working together with very large businesses to get technology into the hands of consumers faster than they could on their own. And particularly in terms of financial services, is incredibly intriguing to me, in part because of the collaborative nature of the industry. It's hard to find a market where the largest institutions, effectively all stakeholders, financial service leaders to regulators, governments, working together to drive impactful change. And I think those types of industries fit perfectly into investing into technology, in my view, that will transform versus disrupt. And certainly being such a large industry globally, there's so much that needs to be done. And sitting in this part of the world, I think where outside of Singapore you have a large underbanked population, the and a mobile penetration that's incredibly high, the opportunities are endless. So part of the reason why financial services is a big part of my focus area going forward.
You know, the other thing I'd say that's really interesting about the financial services industry is just how many other industries it touches, because fundamentally a lot of what happens in payments and lending and many of these other spaces are a really important part of growing other industries. So if you look at something like payments, I think many of us here take for granted the payments checkout system when you're transacting on an e-commerce website. And we're big believers, I think Jack Dorsey said it, that some of the best technologies, new technologies, are ones that people don't even notice. And when these payment systems work well, I think very few of us even notice how important they are. You look at spaces like lending, lending grows the whole pie. Without lending, a lot of people wouldn't be able to afford cars. You look at personal financial management, and it really drives home ownership, and without it, it would be difficult to own a home. And then finally, you look at health insurance, which is fundamentally tied into wellness in the healthcare industry. And so fintech and financial services and what we're all here today to talk about is well beyond just the financial services industry. And it's part of the reason why we're big believers in the evolution of fintech. Early in my career, I used to lead product at a fintech startup that our main innovation back in the late 90s was that you didn't have to send a fax after you made a payment. Probably most people here aren't old enough to remember that. But that's what you had to do in the 90s. After you made a payment online, you actually had to send a fax with your signature. And of course, in 2003, that was replaced with digital signatures, which became part of the law in the U.S. and many other places. But it's really an industry that's touches and impacts so many other industries, and I think it's important to keep that in mind.
In some ways, it's the picks and shovels of multiple other industries. It won't exist. It won't be the same without a robust financial services back layer. So Raj, can you walk through from your view sort of what the hottest trends have been in financial services lately, and what you think the next big thing will be?
Yeah, there's a lot going on in fintech. I think a lot of you have heard some of these perspectives during the course of today and the last few days. A few that we're really interested in, one has been the rise of the mobile wallet. This has been slow in the making. In the U.S., you've had the big tech companies spend billions of dollars in it. But where you've seen real traction coming in, it has been emerging markets. With what India did in 2016, of course, the Prime Minister of India spoke this morning, but demonetization really gave a lot of tailwind to mobile wallets. We're an investor in a company that helps small merchants accept mobile wallets. When we were investing in the company a number of years ago, we really believed in the space, but we thought this is going to be a long-term, slow-growth business because India is such a cash-driven economy. 95% of transactions and nearly 100% with small merchants are done by cash. But we invested in this company, mSwipe, because we really believe that small merchants, that it would help them to be able to accept mobile wallets and credit cards.
And what's incredible, just to chime in, is when you have the equivalent of a Square for India at scale, you end up having a disproportionate amount of information. You can help those small businesses with inventory needs and become, through that information advantage, a banking layer. But back to the broader point about a collaborative industry, one where it happens in transformation, a company like mSwipe isn't trying to recreate all the rails of lending, issuing cards for their SMEs clients. They're working with the existing financial institution players in India to do so, but leveraging their network, which today is stronger than 350,000 small businesses.
Absolutely, and so it's a space where you really see a lot of the innovation coming from emerging markets and not from typical places like Silicon Valley. So that's one that I think is a really big trend that's here to stay. The second one is just the transformation of large financial institutions. I mean, many of these institutions over the past decade have added a tremendous number of people. And you look at where they've added the people as an example. One of these spaces is KYC AML. There are now armies of people who are working on KYC AML. And when you get this wrong, we've all read the headlines with banks that really got this wrong. The penalties are huge. It can actually drive you out of business if you don't do it the right way, which is why banks have so many people who do it. And generally, they get it wrong quite a bit, where they flag a lot of people and a lot of accounts, and they have to go back and do all of this work to verify whether it's a legitimate transaction. And we think that's an example of a space we're increasingly looking at how artificial intelligence can help do that better and faster. And I think generally this drive toward increased efficiency, cutting cost, and serving customers better. The only way to do that is through technology and innovation. And it's been great to see many banks, including some of the banks here in the region, that have really been some of the most creative financial institutions that we've seen. So I think those two trends are two trends that we're increasingly investing behind. The last one that I'll point out is just a threat to the financial services institutions as more and more non-bank institutions entering the space. Increasingly, we see telcos and other companies that are getting into payments, that are getting into areas like lending, and that's because of the data that they have on individual consumers. And the fact that, while not everyone wants to be a bank, people want to do certain parts of the financial services industry. And I think that'll be an increasing trend that will continue to impact the whole industry. But it's a really exciting time to be in fintech. There's been a little bit of a pullback in early stage fintech, but overall you see that it continues to grow year on year. So I don't know if you have anything else to add on that.
No.
I'd love to talk about an area that we've talked a lot about when we've been at conferences, which is an industry that doesn't excite everyone, but we've been excited about it for many years, going back to a small investment we made in an insurance company, and which has now become a rather large company, but it's the insurance industry. About 4 or 5 years ago, I was asked by the CEO of a large insurance company to tell me about all the innovation in the space, and I really had nothing to share. And in that 4 or 5 years, InsurTech has really taken off. It's become really a big part of the whole fintech story. So tell me a little bit about why you think InsurTech has grown so quickly, and what is the outlook for the insurance industry?
Yeah, and as you were saying, Minnie, it's an industry that, of course, through my study, you can tell that hasn't innovated too much, probably in the last 100 years or so, until the past 5 years, right? If you look back and think back to sort of, the modern era, the beginning of the modern era of insurance with Lloyd's Bank of London, typically arising out of this need to ensure the loss of property, starting in the shipping industry. There hasn't been that much change from that initial model until recently. And I think if you think about the categories where innovation is happening a lot quicker today, I think the first one is around customer acquisition. How can I, as an insurance provider, get to my end customers quicker? And I think generally innovation in this space happens in industries where the intermediary cost, and in this case would be brokers, is incredibly high. So generally you always look for a customer acquisition disruption. And how it's evolved in the early days has been around marketplaces. But we've seen even companies like some in our own portfolio, CXA, that is local here out of Singapore, but has expanded across the region, including to China, that they're partnering with both banks and insurance providers to develop a tech-enabled platform that enables the sale of group insurance and then a direct touch point to the end consumers under that employer. And that enables the upsell of individual insurance products, which happens to be, in many cases, more profitable. But more importantly, from a data layer perspective, as you start engaging with the end consumer in a digital way, you could start thinking about concepts of wellness? Can you actually reduce the rise of healthcare costs? So there's a broader, beyond customer acquisition enablement, these types of models can enable also retention, improvement of the model overall. The other area outside of customer acquisition is around new product categories. Some of them is by the necessity of the fast-changing world. As an example, you had companies like Metromile a while back that started innovating in this space by providing insurance by the mile, or you have some local players in India, I think by the name of ACO, that were providing riders the ability to insure themselves on a time basis in rides in Ola and Uber and others. Meaning this is a unique movement to new products. And imagine as autonomy comes as an example into the transportation space, how the model of insurance will radically transform when we're no longer driving. So I think there's a lot of excitement in this idea of new product categories. And also, and importantly, back to the concept of transformation of industries, this idea of moving internal processes to the new era. I think we were speaking to a few insurance providers that would have tens of thousands of employees that were simply being used for paper claim management. And I think that is something that in the future, in the very near future, will be something of the past, where, thinking about what you would call the truth discovery state, how can you get to the information of what is true quicker? You would see insurance providers today leveraging drone networks, satellite images, and a bunch of different tool sets to get data in real time and enable a faster, more nimble claims process as an example. But at the end of the day, I think one of the biggest areas of innovation will be to come back to the core of what insurance really is about, which is peace of mind. I don't know how many of us think of our insurance providers today or our insurance relationships as providing peace of mind. But if it's not all of you, I do think that the industry is and will evolve in that direction, and technology will get them deeper and deeper in providing that as a service. So it's an incredibly exciting, large industry with limited innovation in the past that we'd like to look at today.
I want to switch gears for a moment and ask you a little bit about the innovation model. I live in California, in Silicon Valley. Fundamentally, what a lot of us talk about is disruption, that it's all about how can a small startup grow and really kind of take out the market leaders. A lot of what you've been talking about, a lot of what we've been investing behind has been more about transformation and partnerships, and this idea of partnerships between these large market leaders and these small startups. Why is that important, and how does even those two kind of entities even work together?
No, absolutely. I mean, if you even think of the early days of Facebook, we didn't elect to partner with every university out there to launch the service. I'll be honest, we probably would have thought back then that it would have taken hundreds of years to get every university in the US to agree on launching a platform with all their students. But today, Facebook is a company that partners with corporates, looks to work very increasingly and importantly with government. And my view is innovation will less be about young kids as we were back then in a dorm room trying to take out the largest businesses in the world, but instead nimble, agile, and innovative companies looking to leverage the distribution network, the regulatory know-how, the capital of the largest businesses in the world, and provide a win-win synergy for the corporates that are large. They have all the distributions, however, are a bit slower to innovate. And I think this is increasingly important as innovation touches very traditional regulated fields like financial services, meaning this is heavily regulated, generally requires a large amount of capital to get something to scale. And what we've seen generally is with the collaborative spirit is that large banks, financial institutions, governments, they realize that they can't transform their industries on their own without being open to collaborative innovation with what's happening on the ground in the startup world. So it's a space and a category where, as an example, if you're building a digital-only bank, you could do it, spend a lot of money and try to get to 1 million consumers. But imagine if you're doing that or building a wealth management platform, if you could now leverage the existing relationships of some of these very large institutions, you'll get there a lot faster. So this idea of marriages between the startup and corporate world isn't the simplest thing at the surface. They're very different types of entities. They speak a different language. However, will be, in my view, the future of how innovation touches the hands of consumers quicker. Because if you're trying to start something new and your view is recreate everything that already exists in the world, I believe the answer will be you'll be much slower and less successful than you leverage that already exists, especially in large regulated industries.
Yeah, I mean, just to add on to that, I was an investor about a decade ago in one of the first digital-only banks. And to your point, Eduardo, it took us a couple of years to get to about 300,000 customers. We eventually sold it. And you look now 10 years in, and what you're seeing is that many of these kind of technology companies, just by partnering with one small part of a bank, that they're going from 300,000 customers to 3-4 million customers. And the reason that's really important is a lot of fintech today is about data and algorithms. And if you're in a space like personal financial management, being the company that has more customers, being able to refine your algorithms is a big part of winning. And that's why we encourage the companies we invest in to be open to partnerships, to not try to go it alone. We're big believers in that approach.
And it's part of the reason why, as a venture capital fund known as B Capital Group that we run today, we decided to partner with the Boston Consulting Group, a phenomenal institution that understands the corporate world in a very deep way, that enables us to drive a real bridge, a sustainable bridge between what's happening in innovation centers and the corporate world.
Great. Now that we've given our required plug for our partners at the Boston Consulting Group.
But they are great.
Should we open it up to Q&A? Or?
Let's do it.
Okay, great. Do we have time to do Q&A? Yes, no?
I think that was a yes.
For like 1 or 2 questions, I'm sure it's fine.
Okay.
Yeah.
Great.
So guys, if you want to do Q&A, you have a question for the gentleman, just raise your hand and we'll come over with a microphone.
I see a question over here.
We have one right in front. And then let's see the second hand, please. And then we'll come to you very quickly. Second hand. Also in front. Okay, got it.
Introduce yourself. Okay. Hi, my name is Desmond. And thank you very much for being with us here today. I've both been an entrepreneur. I've been in banking as well. My question to you is, you guys are in finance. How has technology transformed your own business? And can you share some of that, please?
I'll leave it to you, Raj. That's why it's good to have smart partners.
It's a great question. Listen, we're always talking about how do we, as a technology investment firm, use technology more and use it better. And frankly, I think we still have a long way to go. Just as a simple part, a key part of our business is building relationships with people over a long period of time. And to do that, we definitely leverage technology today more than ever before. One thing which we're a big believer in is as we meet people who are entrepreneurs like yourself, that we want to invest in lines and not dots. And what that means for us is that we want to see you and we want to see your company over a period of time. We're high conviction investors. When we invest, we like to take a big position, sit on the board. And to get to that level of conviction generally takes us, some period of time. About a year ago, we started piloting a new technology, a CRM technology that came out of Silicon Valley. A few other VCs like us have started to use. And it's really been, I'm a bit negative on most CRM systems. I think most people at the firm know that. I say that, they never quite work out. This has really been a phenomenal system. When we meet people, we're able to keep track of them. We're able to follow up. And when we see you again, we could be sharp and say that, last time we saw you 6 months ago, you were doing these 3 things. We'd love to get an update on how they're going. And so it's just helped us in terms of building better, longer-term relationships, something which is really important for us at B Capital.
So part of it overall with technology for us, it's about the concept of capturing every data point imaginable and keeping that information in an agile way that enables you to make interesting decisions. So as an example of how technology has been used to date, sometimes we meet very early stage startups. We end up not investing, though tracking them. Sometimes it doesn't work out. But some of those people are of incredible strength to be recruited by some of our existing portfolio company. So by tracking everything, we can not only track companies and ideas that are investable, but in some cases even enable and or support our companies in recruiting that way. So we live the philosophy of tracking all your data, but also making sure that you don't have infinite data with no use for it, and making very sort of agile plugs. And I think it's an industry where some people have even piloted this idea of investing without ever meeting anyone, basically leveraging models, algorithms to choose what might be the right type of investment. We think we're far from that being truly scalable. But I think this idea of venture capitalists being cyborgs and leveraging the technology that they invest in their own business is incredibly important. But it being fully displaced by technology, I think, is a bit further away, especially because of the importance of people in investment decisions and in the success of companies.
Thank you.
Okay, can we have the second question, please? I think we have a hand. Okay, if not, can we have anyone wants to? We have one question here, so I'm going to pass my microphone over to this lady.
Hi, to your mind, what is the willingness of large banks to collaborate with young fintechs?
Yeah, I mean, we have some large bank executives sitting here in the front row where, we think that it really depends on the bank. But overall, as an industry, the financial services industry has been much more open to working and partnering with outside companies. To mention names, DBS Bank here in Singapore, I think, has done a great job with their innovation labs and with partnering with startups. You see that in the US also. So we've seen a great appetite, and frankly from insurance companies too. I think they realize that as you have things like autonomous vehicles, cars are going to crash less, and that's a good thing for everyone in society, but maybe not for insurance companies. Where collision is a big part of their premiums pool. And as Eduardo mentioned, we think some of the most innovative insurance companies are thinking about how do they offer you peace of mind, how do they keep you safe on the road, and how do they do that in a way that it's not about insuring you when you have an accident. The hope is that you don't have an accident and they can help you avoid it.
And I think at a top level, one by one, industry leaders in the financial services space will realize the same thing we did very early on in Facebook, which was not all the smartest engineers in the world work for us. And in fact, not all of them work for us, certainly, because you're a company, you're not the entire industry. So open up your platform and take in innovation from outside. I think if you're a bank and insurance company, it would be hard for you to say the smartest engineers in the world work for you. Hopefully some do, but not all, certainly. So this idea of opening up for collaborative innovation is really a win-win. And I know change takes time, but our view is the willingness and openness is there, and will continue to be there going forward. And if not, we hope all of you in this room will help change that.
Great. Thank you very much, everyone. We really appreciate your time today.